Welcome to this week's market drama. We'll begin with the stock market, which was fairly flat for the week. S&P 500 was flat. NASDAQ was down 0.7%. The action really was in the bond market. The Barclays Ag Index was down 1.2% as yields rose. Specifically, when you look at the 10-year Treasury yield was up for the fourth straight week to 4.32. So what's driving yields higher? Well, inflation numbers came in hotter than expected, right? We had CPI data for February that showed that core CPI number came in year over year at 3.8%. The expectation was for 3.7%. We also had PPI data, which came in hotter than expected. The hotter inflation drives yields higher. It didn't really affect as negatively as maybe some would anticipate the equity market, but I think it's because the equity market's kind of on hold until this coming week. The Federal Reserve has its announcement and there's press release on Wednesday. So we're going to look very closely for any comments from the Federal Reserve when it comes to future interest rate decisions, right? As of now, the consensus is that the Federal Reserve is going to cut three times this year, starting in June. If there's any comments that are a little bit more hawkish from the Fed, related especially to more recent inflationary data, that could alter the equity markets in the short run. Outside of that, we have housing starts data coming up this week, but no doubt that FOMC meeting on Wednesday is the one that's going to steal the show. That is it for this week. Stay tuned for next week.